Hi, everyone. This is Jason Barrick of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. We're recording this interview on Wednesday, July 23rd, 2025. The silver price, it's rallied a lot. It's just under $40 at $39.19. It's rallied a lot, I think, the last 4 or 5 months compared to it was stuck in a trading range. I think a little bit below 30. It would get to 32, it gets smashed down. Now we've had a big gap up in the silver price. The US dollar gold price has also rallied a little bit in the last couple weeks. It touched 3,400. It's down a little bit to $3,387. Today's special guest is a returning guest. He's been writing a commodities and mining stock newsletter for decades, the Morgan Report. He's also published a number of books on silver. He is one of the top experts on silver, including the Silver Manifesto, which is a giant book covering Austrian school economics, gold and silver, supply and demand, and also how to invest in gold and silver stocks. David Morgan of the Morgan Report. Thank you for joining me again.
Jason, it's always fun to be with you. Thank you.
So, David, I want to get your thoughts on this silver spike. Have we seen evidence that there's a really large demand spike, say from China or India, for retail investors buying coins or bars, or for industrial silver for solar panels? Have we seen evidence of that to justify like this huge move in silver?
Well, there's several things going on. One is to answer that specific question. Yes, there has been a increased demand, as almost everyone knows that even looks at the silver market in a cursory way, that we have had a very large increase in solar panel production, much higher than the Silver Institute, CPM Group, Metals Focus, any of them had forecasts. So that's definitely plays into it. On top of that, the investment demand on the commercial side, meaning the ETFs, large scale investors that buy silver in the 1,000-ounce bar commercial category, have been rather stagnant. But I want to break that down later in the discussion. But for right now, you could say that the retail side of the silver market, which is the average investor buying coins, small bars like kilo bars or 100-ounce bars, really is sluggish. In fact, on balance, a lot of them are selling back at these levels, whereas the industrial or commercial side is as strong as it's been in a very long time. And that's evident by the silver price continuing to increase.
Okay, so you would say that the retail investor has actually not really been in the United States and Canada, the Western investor has not really been participants in the gold and silver bull market, that they've been net sellers. You think it's because of inflation? They either have given up on gold and silver, they want to just liquidate, or you think it's because of their cost of living or increases in taxes, inflation taxes, that they have to liquidate their metal to maybe just pay bills?
Part of it's the latter. The people, the cost of living keeps going up and it's a form of savings and it's liquid. And they say, you know what, I need to pay this bill or I'm going to whatever. A lot of it, the other part of it is stale longs. I mean, silver's at a 14-year high. And yet some of these people have waited a very long time to get to this price level where they either have a nominal profit or maybe a real profit. And part of that stale long thing has to do with how the retail market works. And the retail market was very tight supply for some time. And a lot of the online dealers that are well known, and many are friends of mine, I've had dinner with them and, been at investment conferences with them and spoken on, their behalf or whatever. But the point is that the retail demand was so high that the markups of premiums got really expanded. And as you know, Jason, I know you know this, that at one point, the demand on Silver Eagles was so extraordinary that the premium was like 40%, 50%. I mean, these were insane premiums. Yet some people were buying at those premiums because of FOMO, fear of missing out, and hearing from the dealers across the board that, I've never seen the silver supply so tight. Well, that is true and false. Why is it both? Well, it's true the silver supply for retail was very tight, but the overall silver market, which is really based on commercial bars, was not that tight. And so after that buying frenzy took place, all of a sudden a lot of people paid a high premium, and now they're seeing the market move up and thinking, wow, I had to overcome a large premium to get to a true profit. Now I'm in the true profit, and they're seeing a lot of these same dealers, not all of them, but some of them, bidding back. It's giving you spot less $2. So they're feeling like they've been had, like they've been really taken advantage of. They On the buy side, they're paying an extraordinary high premium. On the sell side, they're getting had by getting these very low offers on their product. So I think there's a certain amount, I don't know what percentage, that are just, they've had it. They feel like they've been, you say manipulated or taken advantage of at the least. And that's sad in a way because, as you know, I've been in this market more than 4 decades. And very, very rarely would you ever have to sell your silver under spot price. You almost always got spot for any government minted coin, maybe a premium or a slight one. And silver rounds usually at spot, silver bars usually at spot. Now, if you had something that, was poured silver bar without a mint mark on it or something, you probably have to sell it at a discount. So this is just taking place in the last few years. And frankly, I think it has affected the market. So long-winded answer, but I think it needs to be noted because a lot of people are puzzled. Why are we getting a new high? And yet these people are like very willing for a variety of reasons, but I think those are the main two. Just fed up with the silver market, period, and need the money. That's it.
Well, also during the pandemic, there was a lot of retail bullion dealers that marked up huge premiums, right? That there was like the silver short squeeze with the Wall Street silver crowd. And so what there was at one point, it was $6 an ounce or something like that, $5 or $6 an ounce markup on some of the silver eagles or some of the in demand rare coins.
It's true. Yeah.
Yeah, I
And
mean,
the
like,
market's
and
come back with the buy premium is very low. In fact, some of these dealers are selling silver at spot. Well, how do you do that? They've got to make a profit out of business. Well, you sell at spot if your buyback is under $2. So they're taking the premium on the other side. They're not marking it up on when you buy, but they're marking it down when you sell. So it's it's an unregulated market. I get it. I'm for, a free market atmosphere, but there's also some sensibility, I think, that needs to take place. And unfortunately, you don't really see that kind of situations with gold that you see with silver.
well, I think the big premiums and the huge demand increases, David, for the actual metal, they're coming from Asian retail investors and pension funds and institutional investors. So those are the ones who are getting, especially physical gold exposure. And then you add in what the central bank demand, which has increased a lot post Russia sanctions in early 2022. But I think like the state of the bullion dealers here in the United States and Canada, I think things are bad when Costco is the bestseller for gold and silver bullion, I think mostly gold, and then people are buying it on Walmart, and then you see the earnings. I think the only reliable data we have like for the whole industry right now is A-Mark, what they're the wholesaler, they bought online bullion dealers, so they announce earnings every quarter, and their earnings have I had a gross profit margins, David, at below 2%. I mean, and they were doing acquisitions that I was just shaking my head. They were paying over $100 million for businesses with almost no earnings.
Yeah, it's pretty crazy. I mean, A-Mark is not something I want to be invested in. And they've been around forever. I mean, the first wholesaler I learned about was A-Mark, and that was a long, long time ago.
Well, especially with those margins. I mean, that's not net profit margins, David. That's gross. I mean, their gross profit margins were below 5%. They were below 2%. So that's just shockingly low. It's, things are dire.
Exactly.
So, the demand spike then you think it's coming from Asian retail investors because our mutual friend there, Eric Young, he's on X, he's in China. I think he's in Shenzhen, and then he also goes and buys gold and silver in Hong Kong. He was telling me over the last 4 or 5 months that the Asian retail investor, the high net worth gold buyer, instead of allocating the majority of capital to physical gold, that they started because they were looking at the metals ratios. I mean, the metals ratios were really out of whack 4 or 5 months ago with the gold to silver ratio, the platinum prices. They started allocating a little bit of that capital into silver, a little into platinum and palladium. So would that explain the rally in those other metals?
Yes, the platinum's easier to address, and that is primarily increased demand. Well, what kind of demand has been increased? And the answer is investment demand. And why is that? Well, people like me that saw it as so undervalued, we were writing about in the Morgan report for at least 6 months before the market took off. I was building a position, letting all my readers know. And then in the April letter, I said gold had peaked. It will stay in a trading range throughout the summer, maybe even longer. And it was time to either swap gold into platinum or silver, or if you have fresh money, buy platinum or silver. And that's been very accurate so far. So the Chinese are looking at the spread between gold and platinum and saying, you know what, I'm buying platinum. Gold is too expensive. So the jewelry market in China has picked up. Now, is that a massive amount of demand? No, but the platinum market is extremely small. And so it doesn't take much. And then, of course, again, investment demand on top of it that's increased. So certainly platinum. Silver is similar, but I don't think it's, as we just discussed, the North American retail buyers. It is more Chinese. And I'm very fond and very respectful of Eric Young. I read him on X quite a bit. We've had some DMs, some direct messages back and forth a few times, and I have his email. I have not been able to get him on an interview yet, which I'm working on. But I also have got in a correspondence with, I think it's VBL Ghost, goes by the Ghost something on Twitter. He's pretty connected. He doesn't speak very well English very well, but he reads and writes it just fine. So I reached out to him some time ago about the silver market in China. And there really isn't a lot of arenas where you can buy silver in China like you can buy gold, according to him. And I trust him. But yes, there is more interest, but not at a level I would say if you had like coin shops everywhere, like you have, in North America. I mean, there isn't a major city in North America that you wouldn't have, a few at least gold and silver, dealers. But silver in China is just not that well, um, that big a market as far as the availability is concerned. When I was there myself in Beijing, probably told this story last interview, but I was going to buy silver in China to see how easy it was. I'm in Beijing. I'm in the capital. Now, you could find gold, but you couldn't find silver. The only silver I could find was like silver chopsticks. Now that has changed, but it's not as available to the average Chinese as it is, say, the average North American.
I'm surprised. Those silver pandas are nice. You would think that they would market those as like cheaper gifts, maybe for Chinese New Year or people's birthday or something.
I think it's just a perception thing. Power is perceived, and that it's just not that well known. I mean,
Well, 100 years of brainwashing of fiat currencies, right? Because didn't China used to have a silver standard? I think, correct me if
they're
I'm
the
wrong.
last to go off a silver standard. They were the best. In fact, I don't think you have your camera on, but I have a Wan Bao on my desk here, which is it's a boat, is what it means. It's how the Chinese used to mint their silver instead of coin. They had coins, but they had a Wan Bao, which is a little boat, and so it'd be like a kilo bar, basically.
So I want to ask you about the Swiss gold refiners. So if the Swiss gold refiners, and there was articles coming out of Reuters covering this because they track like the Swiss export data and they interview some of the Swiss gold refiners maybe every couple months. They're talking about just like enormous premiums. They're talking about how they're running the refineries 24/7, 365 to make the gold bars for central banks and institutional investors. And then they're making those 49 kilo bars to sell to Asia at premiums. Are they going to start buying some of that gold that's being liquidated here at bullion dealers here in the West? Are they going to buy it for cheap or below spot or at spot and then go and, recast it into 49 kilo bars and then resell it into Asia?
I think that's very likely. I think that's probably what's going to take place with the lion's share of it. And as far as discounts go, I mean, the wholesalers are the ones I've talked to, and it's not all of them, and some are European, but I mean, the inventory side, even on gold, but particularly on silver, is they're flush with inventory. And the problem is most people don't understand, all the intricacies of the market, but they have to be a market maker. So they're the kind of the buyer of last resort. So if you're XYZ wholesaler and you've got a big retailer and he's going to offer his metal to you, he's going to buy it at, a certain price, and then he's going to sell it to you, probably make a profit. That wholesaler only has so much ready cash. So let's just talk in millions just for illustrative purposes. So let's say they have 5 million ready cash, but they've got a $10 million buyback. So what do? Well, they probably won't waste all their cash, but let's, for this example, make it simple. So they put up the 5 million and then have to borrow the 5 million more to buy the rest of the product. But at what cost? Well, at the current interest rate, which is what? Round numbers, about 5%. So now they're carrying inventory, which they can hedge, but they can only hedge basically at that day at that price. They can try to play games and be funny, which usually or can backfire. So they're hedged, but yet they got a 5% cost of money to keep that inventory. So what do? Well, they do whatever they can do to off their inventory. And sometimes they'll discount it or put it at spot or sometimes below spot just to move it. Because you might take a loss of, let's say, 2%, but if you're paying 5% to carry it, then that makes sense. So it's a very interesting market
So
where we have, like I say, the demand side on the commercial side is very, very strong, but the retail side is not.
So that silver that's selling at a discount here in the United States, maybe it was at the wholesale level or retail bullion dealers that are just liquidating their inventory and saying, "I give up. I can't make this online retail bullion business work. I don't have a zero hedge marketing deal or something something along those lines." Are the industrial end users, so like the silver panel companies in China and India, the electronics companies like Samsung, are they going to buy up that silver and then we're going to work through that inventory and then we're going to have supply problems a couple of years from now after that inventory is cleared?
Well, that's an unknown or not able to determine fully, but I will say, my best effort, so I'm guesstimating here, is yes. The demand for industrial use, especially since you could store silver or gold, any precious metal very easily. I mean, it doesn't go bad. You don't have to worry about, the rats coming in and eating the wheat or any of that stuff. So if you can go and get a supply and buy it at, let's say, near cost of production, warehouse it for a while, knowing that, 3 years out, you're going to have a silver supply you need for not only solar panels. So I would say yes. The rumor, which is a pretty well substantiated rumor, is that China particularly is going to mines throughout South America and looking for doré, crude poured bars, re-refining it and stockpiling it as required. Can I guarantee what I just said is an absolute no? I cannot. But I have enough circumstantial evidence to lean that direction that it makes sense.
And I've been saying for years, David, that it would require at least $35 an ounce silver to bring on a substantial amount of new silver supply. How long does it take to bring on a potentially new silver mine?
These days, probably 10 years. I mean, if you really killed it and you had a permit already, you might go in 5. It depends on the jurisdiction and how aggressive the authority figures are as far as letting things get checked off as the mine is being put in place. But it's quite a ways. And I'd like to circle back a little bit and talk about this deficit that's been going on. Now, there are certain entities that are well known in the precious metals that claim there is no such thing as a deficit. But yet, I spoke to the Silver Institute at law at a very at a recent point in time and discussed this deficit situation. And Metals Focus, the Silver Institute, BMO, some of the other banks are all claiming pretty much the same number of ounces per year in a deficit mode. And I'm taking their data. They have, so let me state that first. Second thing I like to state is, well, supply and demand has to, match every time, every year. So how is that done if you're in a deficit? Well, it's very simple. You match it by the above ground supply. Now that happened for 15 years between 1990 and 2005. We were actually in a silver deficit. Unless you're a student of the silver market, you probably don't even know that. But the above ground supply went from 2 billion ounces. And I'm talking commercial bar silver. I'm not talking bag silver or, silver rounds or silver 10-ounce bars. So the commercial bars went from 2 billion ounces down to 500 million. We ate up 1.5 billion ounces in 15 years. You can do the math in your head. That's an average. It wasn't this every year. It varied, but the average was 100 million ounces on an annual basis. Right now, we're roughly at 200 million ounces on an annual basis. So I said that to build a foundation to tell you this, because I just got back from the Money Show and I was keynote on silver the next decade. What does it look like? And of course, that's part of the lectures, what I just told you. But what I found fascinating was I learned a little bit more, and that is what I already knew is what's the above ground silver supply. And this is by the best studies on the planet. And they'll tell you that there's 3.6 billion ounces of silver above ground. Well, geez, that sounds pretty good. That sounds like it's a pretty doggone big supply. And even at 200 million ounces a year, that's going to last a while. But then I looked into it a little deeper. So the first thing I asked myself, and I asked myself this question a couple of years ago, I said, I wonder if we've got 1 billion ounces in silver coins now, because the U.S. Mint has been minting the Silver Eagle since 1986. And I looked up that number, somewhere around 675 million ounces have been minted just of U.S. coinage. But then you throw in Canadian maples, the Australian loonies, the Austrian mint, and the South African mint that's minting silver coins now, and whomever else. And so what you have is 1.15 billion ounces of silver in government coin. All right. Now the next question. So that's all strongly, strongly held hands. I mean, anyone that's got a roll of silver eagles or silver maples or a monster box or 2 monster boxes or 10 monster boxes or even 50 monster boxes, all of those people, for the most part, exception here or there, are strong hands. They're not selling their silver for, a 10% profit. They're looking for a double, triple, quadruple, 5x. So that's 1.15 billion. Now, the next category of silver in the retail side is silver rounds, which are basically silver coins, but we can't call them coins because they're not minted by a government press. They're minted by private mint. And they might have Santa Claus on there, or they might have a reindeer on there, or they might have an animal, or they might have a logo for a local Kiwanis club or a sheriff's department or whatever. But they're still identical from the aspect they're 999 fine silver and they're 1 ounce, they're round in form, and there's 850 million ounces of those. So if we add those two numbers together, we're at 2 billion ounces out of the 3.6 billion ounces. Okay. So now we're getting down to the real market, which is the commercial bar market. And that's 1.6 billion ounces, except there's an exception to that 1.6 billion ounces, and that's if the bar category from the Silver Institute does include retail bars, which are the 100-ounce bars, the kilo bars, and even the 5-ounce bars and the 1-ounce wafers. So how much of that 1.6 billion ounces is retail bars, which again would be strong hands? And the answer varies. There's an estimate, but the estimate's around 300 million. So now we're down to 1.3 billion. That sounds like a lot of silver, but remember the silver market uses 1 billion ounces per year. So that would give us about a year's or more inventory above ground. However, more than half of that silver in commercial bar form is used as investment purposes and runs between the SLV, the PSLV, the Aberdeen Trust, and the ETFs, in other words. Well, how much is that? Well, the SLV is about 475 million, the PSLV is 200 million, and the other trust is about 50 million. So you're looking at about 700 million out of that 1.3. So you're looking at about 600 million ounces. Now, if we're running a 200 million ounce deficit per year, and last year maybe 250, you're looking at about 2.5 years or so before you are, in theory only, let me say in theory only, pushing the silver market, the commercial bar market, the derivative market, what everyone prices the silver price upon, which is the commercial bar market in derivative form. We're getting tight. So that's the big picture looking out 10 years. What's the silver market look like? And that's with the demand side for investment being static. And I don't think it's going to be static. I think there's going to be further demand as we see Russia come in and say, hey, we're going to buy silver. As you outlined, Jason, the Chinese are looking at silver more as an investment or undervalued relative to gold. Maybe some industrial users saying, you know what? I understand what David's saying. We've already done our own study. He just verified it. And I think it's a lot smarter to buy it now under 40 and stockpile it than it is to go and open up a new mine on our own. So the market, even though it sounds like, oh man, what's the worry? 3.6 billion ounces, and there's this little, not too big a deficit, and people are selling back their silver to their coin shops, ho hum. But if you look at it a little deeper, as I just outlined, silver market is tight and getting tighter where it counts, and
Well,
that's
it's
on the big demand.
Well, especially if the silver industrial demand for solar panels, I mean, that's what exceeded expectations enormously by China and India. They're installing a lot more solar panels than any of the experts like the Silver Institute in their report and others have anticipated, the investor demand. But that's an important point there you brought up for mine supply. I mean, because silver is a byproduct. So normally it's going to be a large gold mine or a copper mine with silver or a lead and zinc mine with silver as a byproduct. And like you said, depending upon the country, it could take 10 years. So that's why some of these companies that maybe already have a producing mine, they've been investing besides like with their free cash flow, besides what buying back shares or increasing dividends, they've been investing in property, plant equipment, expanding their mill and maybe a small expansion project to an existing mine. Because if it's just a brownfields project, David, it's not 10 years, it's a couple years.
Yeah, well, yes, I'm not going to argue with you, Jason. You know your stuff, but it does depend, where it is and all that. So there are variables. 10 is probably a little conservative, but I mean, you look at, the mines I'm familiar with. I mean, we've been at this over 4 decades, and like, Mag Silver, how long it took them to really get up and running to full production, and it is a lengthy process. I'll say best case, I agree with you.
Oh, I'm just talking about like the producing. So let's say like you brought up Pan American Silver because they just bought Mag. Let's say they want to do an expansion project at Cerro Moro or at Juanicipio. I mean, they could probably uh, invest now, and maybe in a couple years they could have some type of mill expansion, exploration budget, and have some expansion at an existing mine. But a new mine, like you said, it takes a long time with permitting and all that, especially Mexico now with the open pit, all the regulations with open pit mining.
Correct.
Do you still think that Mexico will have growth in silver production, or do you think like all this stuff with the open, because it just seems like every couple of months things are back and forth with the permitting?
Well, I'm pretty connected to the Mexican silver scene. In fact, I just had a long talk with my friend Andreas. I won't give his last name, but he's right up in line. He's at the university level. He's been on the board for many different mines in Mexico. He knows, I wouldn't say every silver mine in Mexico, but probably or close to it. Bottom line is simple. If you're not permitted already, chances of getting permitted are not very strong. You're not going to get permitted for an open pit at this point. So if you have an open pit silver project, you're not permitted already, forget it. If you're already permitted, you'll probably get it through. So I would say that there is a damper on new mines coming on board, but older mines are pretty safe at this point in time. Could change, but a lot of these smaller towns in Mexico are very pro mining. I was discussing a potential mine that has been permitted that been kind of laid away from the 2020 situation, kind of laid to rest, you might say, and now could be revitalized pretty easily. And the people want to work. It's Mining is huge in Mexico. But to answer your question, I don't think it's going to increase. I think it's probably going to be static, which means remain the same as it is now, or actually decline somewhat. The grades in Mexico, on balance, on whole, on aggregate, not every single mine, mag is extremely rich, but you take it as a country, the grades have been going down.
Oh, that's like every major silver producing country like Peru and Mexico and Argentina and Chile. I mean, all the silver byproduct grades. I wrote an extensive article on this. I went back through the old Pan American Silver annual reports dated from like 2013 and 14. I mean, the grades are 50% lower, the average silver grades now at all their mines.
Yeah, it's so there's that, along with this deficit situation. And again, that deficit, to just repeat, because I think it's really important for people to understand this, the demand side for investment can move drastically. I mean, I think you remember this, Jason. You remember the WEF or the Davos 2020 when Bloomberg was out there interviewing everybody. They interviewed Scott Meaner of Guggenheim as a chief financial or chief investment officer. And they asked him what's his go-to investment this year. And he said silver. Do you remember that?
Vaguely,
Okay.
yes. And he was like laughed at. Yeah.
Yeah, they almost fell off their stools. They couldn't believe he said silver. So
How dare you not say Bitcoin or meme stocks or tech stocks or we they weren't pushing the artificial intelligence bubble quite yet.
not then. So the guy composed himself. He said, well, silver, why not gold? And Scott Meanard said, well, gold's pretty near its high, but silver is like 60% from its high. I think that was the number at the time. So if you look at what happened in 2021, the investment demand through ETFs for silver was the highest it's ever been ever. 320 million ounces of silver in the ETF, 200 million, which is about your average from retail, for a total of 520 million ounces of demand. That did have an effect on the price. And now he is deceased. That 320 million ounces was basically sold off and came back into the market. And things are the way they are right now. But who's to say that in the near future or, in the near future or not, at some point in time, there may be another Scott Meaner or two of them or three of them that say, you know what, silver's undervalued relative to everything else. No one wants it. I do. And you have more demand on the investment side from institutions.
Well,
And
central
that
banks aren't dollar. I think the difference between gold and silver right now is that central banks are not dollar cost averaging huge tonnage amounts of silver.
no, central banks don't really pay any attention to silver for buying purposes. They might pay attention to it for their books and their derivatives and how they trade it. But as far as the physicality of it, the only one that's really on top of the situation are the Russians and Chinese.
And I don't think we're going to see a lot of new silver supply. I know what Dundee Precious Metals, they just bought a massive new silver mine, but we're not seeing announcements of a lot of new silver mines. I mean, maybe we'll see some copper mines that have some silver byproduct. We'll see those start to come online. But if I'm Wheaton Precious Metals or Royal Gold, now that they bought Sandstorm Gold, which owns a good amount of silver streams, I mean, those guys are sitting pretty with fixed costs on those silver streams going forward.
Yeah, I still like the streamers. I think that's the most conservative and best way, especially if we get a higher and more alarming inflation problem. So that's the way to do. As you probably recall, Chris and I did an update about 6 months ago because we're getting a lot of questions from our members. Well, what about the inflation? What's it going to do to the mining industry? And I explained it's not going to help the mining industry, but in the streaming or royalty industry, it doesn't have much of an effect.
Yeah, I mean the costs are fixed. They're either a flat cost, like say $400 for the gold stream that was prepaid, or 20% of the spot price or something. So I mean you're sitting pretty with locked in profit margins there,
Definitely.
and you're just minting free cash flow, which is why you saw Royal Gold. Because Royal Gold, like I keep getting people to ask my opinion on this merger. I mean Royal Gold was a good business, but they had almost no growth. So they had a really high valuation. They were increasing dividends. They didn't have a lot of growth in the pipeline. They bought what the Great Bear royalty a couple of years ago. That was I thought for 150 million cash, that was a good purchase in hindsight. But now they just added a ton of growth pipeline. So now they're going to have a lot of growth, potentially industry leading if this Sandstorm Gold deal goes through.
Yes, exactly.
Yeah, so I mean the company on paper, David, if the when you add in like all the additional assets, the growth pipeline, I mean this is the company has very little flaws with the diversification and all the growth. They have a lot of growth coming online if the deal does go through.
Exactly. No, it's a good time to be in the metals. There's no doubt about it. I mean, now that silver is at a nominal high or 14-year high, it's not over 50, but it's pushing toward 40, and it looks like we'll get there, this year pretty easily. And how long it'll hang there or not remains to be determined. There's a there's a very big tightness on that side of the market, as I keep saying.
Do you think we're going to see a lot more mergers and acquisitions in the royalty space, and then also what with a lot of the gold and silver miners? Because we're starting to see some bids for some of the assets, what Equinox Gold and a few of the others.
Yes, I mean, three of our picks, and we have a short list. I mean, I don't like a long list of every little junior that's out there. And three of them have been merged with already. which is well, it's a tribute to being a fairly good stock picker, but it's also a little discouraging from my members because they feel like they're not getting full value for having a good company that they own. But I don't control that. These big boys come along, they've got cash, they see value. It's a lot more of a sure thing buying silver in the ground that's measured and indicated and already being mined and buying it and not having any of the worries about a discovery situation. They can't afford that.
Well,
So
also, David, I think the retail investor who maybe doesn't understand mining stocks and how the capital markets work, they see one of these acquisitions and they blame the CEO of the company being acquired. But unless the CEO controls like 50% or more of the shares, it's the institutional investors, the pension funds, the largest shareholders who determine like these buyouts, the mergers and acquisitions. So if the larger company goes to say the pension funds and the institutional investors and they negotiate ahead of time with a buyout and they get what 30, 40, 50% or more of all the shares that agreed to the merger, then the deal is done. There's nothing the CEO can do because he doesn't own 50% of the shares.
exactly. Well stated. Thank you.
Yeah, well, I mean, I'm just saying this because, like, the stuff I see about Nolan Watson, I just see people like he sold the company out; it's all his fault. He renegotiated a higher deal for himself. Like, and it's like, what is going on here? It's the institutional investors and the pension funds that own the majority shares that decide if this deal goes through or not.
Well, that's one of my pet peeves is that one. And then the other I already outlined about, people are taught that the retail silver market is a silver market. No, the retail market is about 20% of the silver market. The other 80% are jewelry, silverware, and industrial demand. So if you really want to look at the silver market, you got to analyze it properly. But I've just been saying this recently, and I think I've kind of ticked off a few of the bigger retail dealers for my comments. But you know what? I speak my mind, and I'm not owned by a publishing house. We do our own work, and the market's going to mark up the retail product because it's in tight supply. So be it. I mean, that's real free market dynamics. But uh, but is it true? I mean, was it really as tight as it was proclaimed to be? Especially when there were other dealers that were not very well known that I was in tune with, telling my members, and they were not getting those kind of markups.
Well, also there's a lot of false marketing and misinformation for silver on these TV commercials, David. I'm seeing like advertisements saying that silver demand is gonna go rapidly through artificial intelligence software and data centers, but I don't really see. I haven't seen any research reports saying that a lot of silver is going to be used. I mean, I see like energy and electricity, like nuclear power, natural gas, copper, maybe. They're talking about potentially switching to graphene in the next 5 to 7 years with these GPU chips. NVIDIA CEOs even talked about it. I haven't seen discussion saying that silver usage is going to spike from this.
Yeah, no, I don't think it is. I mean, I think it is what we already outlined. And the problem with silver is that it was probably the most emotional investment you could make for years. Now it's Bitcoin. Bitcoin has definitely replaced silver as the most emotional thing you can buy or sell. Silver, thank goodness, is not at that level anymore. But at one time it was. So you have a lot of emotional buying. People see it on TV. They don't even know where to find the silver price. Now, with the internet and phones and everything, it's kind of hard not to, but there's still a segment of the population, mostly older, that, don't know. And they see these full page ads of these really great advertorials about this top secret silver supply. All they are bullion coins with a nice stamp on them with a big story behind them. And they sell these things out at maybe double or triple the melt value. But people don't know any better. It's very sad what takes place in this industry at times.
And the profit margins are not good for the bullion dealers. So people have to, you can see that with AMARC, that the profit margins just are not there, and they have a huge control over what the wholesalers, the refiners, they've been buying up numismatic coin dealers and online retail bullion, and their profit margins just are not there.
Yeah, exactly.
I want to ask you, since you started a royalty and streaming company, about potentially new royalty and streaming company barriers to entry. Do you think it's extremely difficult now compared to, say, like 10 years ago to start a new royalty and streaming company and go and buy cash flow assets?
I would say yes. When we started Lemuria, we were kind of at the beginning of the end. You could do it with a small company, which we were, but there were some available. The one that we bought, the Kalioma royalty, was very lucrative. It's paying off now and exceeded what the numbers would show. We felt it would do that, and it did. But you had to be patient and wait. But that was about the only one we were interested in. Well, let me reframe that. We were interested in anything along those lines. We couldn't find them. There were people that jumped in a little bit behind us and were overpaying for these streams or royalties. And so I wouldn't do it. I'm just too conservative. I mean, if you get $1.10 or $1.20 or $1.50's worth of value for your dollar, then what do you do in investing? And there are people paying $1.50 for a dollar. That doesn't make any sense to me.
Well, I would say they're paying more than that. If you saw a Triple Flags deal, I mean, they paid almost $350 million for the Origin royalty for the 1% NSR, what on the massive new discovery in Nevada, what the Silicon and Merlin deposits, and that's 10 years or more from cash flow. I mean, it's a good mine potentially. I don't know when they're going to start construction on it, but it could be 10 years or more for cash flow, and they paid almost 350 million for it. So the market conditions are just shocking what some of these companies are paying.
True. And then if you look, to counter that or push back on you a little bit, that's true. Everything you said, I will not argue with you, Jason. You're too smart and you're too knowledgeable. However, if we go into a dollar destruction where all of a sudden we're at, 10% official inflation or better, all of a sudden that 350 is getting devalued pretty quickly. And the
Oh, so,
metal,
so you're saying if the what at a gold price of 5,000 and a silver price of 50 or $60, that 300 million or so is tiny then.
well, I would say tiny, but you have to discount it. So, you
But
know,
well,
but
I
that's
mean,
not,
once
go ahead.
it's just not cash flowing anytime soon. So I mean, like Royal
No,
Gold paid a couple years ago, they paid 150 million for the royalty on Great Bear, which I think is a great royalty, and they paid a lot less for it. So I know people were criticizing them at the time, but when you compare the two deals, what Triple Flag just paid and what Royal Gold paid a couple years ago, I think Royal Gold got a way better deal.
I agree. And just want to make the analogy, it's similar to a lot of real estate investors. So they'll buy a single family home for top dollar. They'll rent it at a negative cash flow. So the people that are paying rent are not covering the mortgage payment. But real estate investors do that all the time because inflation is going to bail them out. And it does sometimes. I mean, that game worked for a long time in California, but it doesn't work forever. So I'm not saying it's a smart thing to do. I'm saying it's more risky because you are basically gambling that inflation is going to bail you out. And all of a sudden, that the dollar, it's a short on the dollar basically, and the price of the home does go up, and the mortgage stays constant, and so rentals go up over a few years or whatever, and all of a sudden you can rent it for the mortgage payment, and the appreciation of the house is why you made the bet in the first place works out, and you cash out. But you cannot, that's more gambling than investing.
Oh yeah, I agree. It's you're gambling just on higher prices, not for cash flow, and you're paying a really high valuation. It's like a greater fool theory. You're gambling that the property values will keep going up. Well, guess what? That was happening in the Palisades, David, until the insurance companies, 12, 18, 24 months ago, started dropping the homeowners in the Palisades for homeowners insurance, right, or fire insurance, and then you get the fire, and then all that, that they were relying on higher property prices, and now they can't even get permits to rebuild the houses. It's a total mess there. So.
Crazy. Yeah, I know.
Well, that's because they weren't conservative with their investments, right? They were just gambling on higher prices. Some of them.
Exactly. Yeah.
So, do you think then we'll see a lot more mergers and acquisitions for a lot of these copper and gold miners, silver as base metal, as long as metals prices don't crash? Do you think that they'll take the free cash flow and we're going to start to see what share buybacks or dividend increases? They're going to have a lot of free cash flow to invest in all these things, including mergers and acquisitions?
I do. I think you'll see a consolidation across the board, and you won't see too many new startups. There are some out there, but I think the industry will be like most other industries. You look at, the consolidation of pick an industry, a lot of retail or whatever. Well, look at after the 2020 incident, how many mom and pops were just basically persona non grata, basically forced out of business, and yet the corporates were still there and got bigger. and had less competition. I
Well,
mean, you
they
could
they
go
had the
into go
exemptions, right? So while
right.
the mom and pops were shut down during the pandemic, while Walmart and Target and Costco and the grocery stores, the big box ones, were all allowed to continue to operate.
Yeah, well, you couldn't get infected at those locations. It was just the little ones where you could get infected.
Well, look at Trump with the tariffs. What didn't the large tech companies and some of the others they got exemptions? I think already.
Yeah, no, it's a rigged game. It's unfortunate, but it is.
Well, as an investor, I mean, there's opportunity there with the government, violating the free market there and changing the rules and regulations. They're going to create advantages for certain companies in certain industries.
Yeah.
Look at copper. I mean, like what? There's a 50% tariff on imported copper now in the United States, and in the rare earth company got a huge investment from the government. So anyone who's gambling on these companies got a huge pop in the short term.
Yeah, you sure have.
It's just going to be less free markets going forward, David. It's looking like we're headed back to what neo-mercantilism and protectionism, similar to what post October 1929 there, with a lot of the same policies.
Unfortunately, yes.
Well, I think like U.S. and Canadian copper and gold projects are potentially going to benefit. Maybe some silver byproduct there. So domestic supply will have some advantages then.
Yeah, they will. Oh, the world goes round. It'll continue, but it's unfortunate that the cost of freedom is a very high price to pay, and most people, I don't think too many people really see it slipping away. I know that, in our group, they certainly do, but I think the public at large doesn't really see it. They hear the word technology and they think that's going to solve a problem. Well, it could, but it's a double-edged sword. I mean, it might make your life easier, but you have less freedom or you're more controlled. I just put up a little short on my X feed that was produced by a Substack friend of mine that talks about or shows this small short about Australia, and it's in the future. It's fiction, but it shows you how the pervasiveness of the control mechanisms continue and how bad it could be in theory. And it's pretty
Well,
scary.
especially with what Palantir and some of these other companies that are doing what censorship or surveillance, tracking people online with the real ID and artificial intelligence software now. But the other issue that I think a lot of people are just starting to figure out, you're seeing this with the announcements, what from Microsoft and Meta and Salesforce, artificial intelligence software, it's causing creative destruction. I think around 60% of the recent college graduates don't have a job now here in the United States. So they're not even getting hired for entry level jobs because they were using ChatGPT to do their homework and write papers for them, a lot of them. And then the employers are saying, well, if you're not actually studying and not going to provide any value, we could automate your job with artificial intelligence software. We don't need to hire you.
Exactly. Now it's brave new world. Here we come, or here we are. We've entered it already. We're just it's not known by many, but I think we're there already.
Well, I think unfortunately, David, the solution, I'm using air quotes here, I've seen a lot of tech experts and other people talk about universal basic income. It's like currency debasement, inflation, taxes, handing people free stuff. That's the exact opposite of what the government should be doing at this point. Um, it's just a mess. They're like doubling down. It seems every time there's a problem in the real economy, the government just doubles down with more control and more currency debasement or taxes or rules and regulations.
I agree.
And this includes Trump too. I mean, some of the with the tariffs and the small business owners are the ones that are absolutely getting hit hardest here. So.
Yes, it is.
Well, I think I was saying for years, like I said a few minutes ago, that we're gonna have to see $35 an ounce silver because that's the price we need for silver to stay at for new supply to come on, $35, $40 an ounce. I think we're gonna have to stay at these levels for new supply.
I agree. Yeah, there's something that's in our archives on the member side only called Archie's Rule, and it basically goes through those dynamics. And you're right. You really need about a 2x from the spot price to be really healthy. So if silver spot is 30, you're more like 60 is what you want now, but 35 to 40 is enough to have a viable business. But the margin might sound huge, but the average cost now across the silver producers, I'm talking silver miners, not byproduct miners, about $28 an ounce. So you're not making like, crazy profits. It sounds like it when you say, oh, 39 and 30 or 28, so you got a $10 margin, 30%. That's better than a lot of grocery stores that are running like a 3 or 4%. But it's not an accurate number because you've got to replenish your supply, which means you've got to buy out another mine, go discover another mine, and then you have reclamation that's not really ever talked about. But after you're done and the richest gold mine in the world ends in failure, once you take out that last profitable economic ounce, you close the mine. Well, these days that means bringing it back to nature, basically. That can be quite expensive. So.
Also, David, a lot of the silver mines that didn't go into production over the last 15 years, they were discovered, 2009 to 2011, 12, with a lot of exploration budget back then when the silver price was high. They needed $35 an ounce silver back then. And that was before all the inflation. I mean, like you said, the ore grades are down. A lot of the other mining costs are up. The only thing that's not a lot higher, I would say, is probably energy costs right now. But a lot of the other costs are substantially higher than the past.
Yeah, oil's kind of, I wouldn't say saving the industry. I mean, the metals are doing well, especially gold, but it wouldn't take a lot to change the dynamic if everything stayed static and then oil went from, where are we at in the 70s or in that ballpark to 100. If that were to occur, then all of a sudden your bottom line, a lot of these miners wouldn't look so great.
But I think the current trend, the macro trend where these non-G7 central banks, they don't buy U.S. treasuries. Maybe they do dollars for cross-border trade settlement because I think the demand for dollars for that is still strong. But the macro trade, David, is these non-G7 central banks, institutional investors, pension funds, they're adding gold allocation at a pace that we haven't seen before. It was strong before the Russia sanctions. The last 3 years, it's basically about doubled each month for the dollar cost averaging. If that trend continues, David, I think we could see $4,000 an ounce gold. It's not a question of if, it's a question of when.
I agree. Yep.
Well, please tell my listeners more about the Morgan Report. You're probably one of the few industries right now. Gold and gold stocks are one of the top performing industries out there with the free cash flow. There's a lot of free cash flow for a lot of different things, whether that's dividend increases, share buybacks, investing in the business, or mergers right now.
Yes. Well, I've got a special URL for your listeners. So if you go to the Morgan Report, just put it in themorganreport.com/podcast. And we've got 3 free offers on there for your listeners, and they can take advantage of them or not. As far as the next thing I like to talk about, the documentary that it's taken longer than I expected, etc. There was a glitch. Our main producer, editor, actually had some health issues, and he was unable to finish. But I found a gentleman in the UK that will finish it, and it looks like it'll be finished probably by middle of August or so. So once I approve the final version, we will be putting that out on the web for everyone.
Is this a documentary on silver, like silver, the new uses for silver?
No, it's called Silver Sunrise, but it's more about the spiritual side of money, how money affects the globe or the world on a dynamic of fear, stress, and control, and why the money masters don't care what your political ideology is or what your religious beliefs are in whatever area you're from in the world. All they really care about is he who prints the money makes the rules. We don't care about anything else. And that's a control mechanism. And once that's in place, then you see things taking place as we discussed earlier with universal basic income, real ID, get your, give us your biometrics, and we can track and trace every purchase you make. We can tax it at point of sale. You get so many carbon credits, and if you violate any of our mandated rules, we will control you even further than we do, and that is not freedom.
Is the Silver Manifesto available on audiobooks still?
Yes, it is on audiobooks.
Okay, because I have questions because people, some of my friends who are like hedge fund managers and institutional investors, they want to start researching silver. So you have Peter Krauf's book on silver and you have your book on silver, and those are the only 2 ones I recommend.
Thank you. Money Metals has a supply of my book. They did their own printing, and so I don't know how big a purchase you'd have to make. Probably pretty modest, I guess, 1,000 or two. You could probably get the book if you asked for it.
Well, the audiobook is a good listen. There's a lot of stuff in there about Austrian school economics and the history of money and silver, and then talking about the basic supply and demand. Although I think there's going to be a lot more usages for silver going forward. Looks like I think we're entering a new technology cycle here. So I don't know exactly what the innovations are going to be, but there's a lot of investment now from the big tech companies, and I think we're going to see a lot of surprises over the next 10 or 15 years.
Well, I think it surprised me, and I didn't know this until a few years back, but the chip market that we all talk about, 44 million ounces a year goes into those microchips. So
Oh, that's what silver contact switches or
yeah, the basic switch, what you do with these computer chips or these chips in your automobiles or your refrigerators or whatever, they all use a little bit of silver, but on aggregate over the whole thing, it's about a 44 million ounces.
it's interesting over the next 5 to 7 years. I mean, we could see a switch away from silicon. I mean, the CEO of NVIDIA is talking about this going to graphene light-based chips. So we'll see. I mean, they haven't built a commercial manufacturing facility, but they seem to have perfected the manufacturing process for graphene in the lab, and they're planning on building some of these manufacturing facilities in the next couple of years. So we'll see if that happens. But the technology, like it could improve computing power enormously. It's silver is just gonna its usages are just so vast with electronics and solar panels, so many different things silver can be used for.
Exactly.